As these central banks continue to de-dollarize, they realize that inflation has been chosen over austerity, the way that all governments have. You're talking gold that could easily be up above $10,000 because 80 billion pushed it up here to 2,600 and change with virtually no U.S. participation. And I think that you are seeing and will see the acceleration in de-dollarization accentuates. I can't imagine that all you would see is 5% of the 8 trillion in US dollar holdings that these central banks hold around the globe would be converted to gold. I think that number will be much more. And that's 5 to 6 times what they've already bought in the last 2.5 years, which has been the driving force behind the rise in gold.
According to World Gold Council data, emerging market central banks led by Russia and China have been the principal buyers on the gold market. Although the dollar remains dominant, according to IMF, its share in central bank reserves has fallen to 59%, a 25-year low. Overall, demand for gold from central banks has doubled over the last 2 years compared with previous years, which has had a major impact on the price. In a striking observation, AndySchectman reveals that central banks are de-dollarizing and choosing inflation over austerity. He predicts gold could exceed $10,000 as this trend accelerates. A mere 5% shift of global dollar reserves into gold could inject up to $400 billion, which he calls rocket fuel for gold's ascent. However, Andy highlights the massive gold purchases and repatriation by countries like India as clear signs they understand what's coming. As per the latest data by the Reserve Bank of India, RBI, gold reserves increased by $726 million to $63.613 billion, compared to $62.887 billion last week. In a bold statement, Andy stresses that without reading UBS and Goldman Sachs reports, investors will miss the $3,000 gold prediction. He highlights Goldman Sachs's precious metals requests and the first ETF uptick in years, as Fed rate cut in November could be rocket fuel for gold. Top-line gold prices continue to skyrocket, closing last week at another record high, as several factors help boost the precious metal, which has actually outperformed the blistering stock market in 2024. In his assessment, Andy predicts the dollar could weaken further, boosting gold's rise. Additionally, Schectman highlights that 8.1% of LBMA silver was delivered in August, with Saudi Arabia quietly acquiring 160 metric tons of gold. Now, we present the clips of AndySchectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I just have a feeling that there will be a problem with the banks that ignites the systemic problem. And look, more than anything, the central banks, Dunnigan, they may have the most money, but as I've said over and over and over again, they know the playbook. And that's more important than anything. If you understand where we're ultimately going, then only in retrospect will those moves have been obvious. But to me, it is obvious because they know where it's going. And everything that they've done back at it, that they knew the playbook, whether it be Basel III or the reclassification of gold, or all of these decisions, even the new settlement currency and how gold must be held within the borders of the countries that possess it. So do you think there's any coincidence that all these banks not only are massively buying gold, but also repatriating it, just like India, who bought 1.5 times the amount of gold in the first 4 months of this year than they did all of last year, which was a record year? It's because they know the playbook, and the BIS is center in telling everyone the secrets or giving them the playbook and saying, now make your maneuvers and do it quietly and do it as swiftly as possible because there's going to be a change, whether it be reclassifying gold as tier 1 or issuing a new settlement currency in the BRICS nations. They know where it's going, and that's why you don't listen to what they say, maybe. Just watch what they do, and that's the key. Again, these banks are coming out and saying, yeah, we're moving to $3,000 an ounce. And Goldman Sachs has said that they're being inundated with precious metals requests on their trading desks, which is a very, very, very big deal, obviously. And it is being evidenced by the first time in 2.5 years, we see an uptick in ETF holdings. And so as ETF holdings pick up, as the Fed pivots and lowers rates, probably another 50 basis points here in November, this is just rocket fuel for gold, which has done what it's done, again, rallying 29% and 47% since 2022 when we saw this divergence in 2022 where the ETF started to outflow in the U.S. and gold started to go up, really. And so this 47% gain since 2022, as the public has not been involved in it, with positive real yield and a strong dollar. Now you see dollar kind of hanging right at that 100 mark on the Dixie, and could very well fall from there and drop a little bit, or maybe a lot, of course. And then you see that the yields coming down, and now the ETFs ticking up. This is all huge. And to see Goldman and UBS say these things is again very, very significant. They're acquiescing to the reality that, again, you can only manipulate a market over an extended period of time, done again by pushing it in the direction that it is going. And that is the key, that maybe these banks realize it's as dumb as a mud wall, like Bank of America, to be naked short in a market where the rest of the world is voraciously accumulating metal, to the point where just in the month of August, 8.1% of all the silver held that's available for delivery, and the LBMA was delivered 8.1%, over 25 million ounces in the month of August. So it's accelerating the acquisition of gold. And it's also being done in a manner to not upset the apple cart, as we talked about last week, with 160 metric tons purchased by Saudi Arabia, but not disclosing it the way they're supposed to the IMF, because they don't want to upset the big kahuna, the United States. And yet they're playing both sides of this game. Ultimately, if you just put all of these things together and realize that the commercial banks and the central banks, who are the most collectively well-informed and well-financed traders in the world, are telling you where this is going. And if you don't pay attention to the Goldman Sachs report or the UBS report, where the hell do you find it, right? Where are you going to find it on the mainstream? Are you listening to the mainstream, who isn't saying a word about any of this? It's not easy to find and read through these analyst reports for UBS and Goldman Sachs. It sucks reading it, to be honest with you. And they're 25 pages of a bunch of mumbo jumbo. And then they say, yeah, gold's going to 3,000 by the end of the year. But if you only relied upon, and that you consider yourself very well read by reading the Wall Street Journal, watching Fox News, and paying close attention to the markets, you are missing this completely and totally. There is your massive contrarian indicator. Not only are the biggest boys in the world telling you, yeah, this is where it's going, but you can't find it unless you dig.
According to AndySchectman, gold has historically rallied up to 10% in the 6 months following a Fed rate cut, as noted by the World Gold Council. He predicts much higher prices for gold in the next 6 to 12 months, pointing to increased central bank demand, the rise in ETF holdings, and the potential for further rate cuts. Andy expresses that the BRICS nations' gold-backed currency plans are real and will be discussed soon. This week's record high means that the price of gold has climbed hundreds of dollars per troy ounce over the last year. Tuesday's price is up nearly $145 from a month ago, and more than $740 from this time in 2023. Analysts note that the price of gold is up nearly 30% year-to-date, outpacing the benchmark S&P 500's roughly 20% gain since the start of 2024. Concurrently, Andy believes that gold's price has been suppressed due to shorting on the LBMA and COMEX, which should be significantly higher.
Over the past 2.5 years, according to the official numbers, and we all know those official numbers are vastly understated, but the central banks of the world have purchased 1,250 metric tons of gold, which is worth about $80 billion. And when we talk about a government that, by its own estimate, will take another $22 trillion in debt over the coming decade just to keep the lights on, so to speak, to roll over the obligations that we have, and to continue to fund our spending habits, well, that's an awful lot of money. And I'm sure that those are severe concerns. But think about this. In other words, if the central banks were to purchase, let's say, 5% gold right now in U.S. dollars, just converting 5% would be another $300 to $400 billion in purchases. Now, an $80 billion infusion pushed gold up to its all-time high. At the same time, we have a strong dollar, we have positive real yields, and outflows out of the ETFs. What happens if they just convert 5% of their dollar holdings? And it seems that this has been a trend that's been accelerating. Now, granted, that's $300 to $400 billion. That's 5 times what they bought over the last couple of years. But what I'm getting at is that as these central banks continue to de-dollarize, they realize that inflation has been chosen over austerity, the way that all governments have. What I'm trying to say to you is this: you add that kind of money, you're talking gold that could easily be up above $10,000, because 80 billion pushed it up here to 2,600 and change with virtually no U.S. participation. And I think that you are seeing and will see kind of like a hockey stick, right? Where the acceleration in de-dollarization accentuates. And I really do believe that that's as crazy as it sounds to me, a conservative estimate. I can't imagine that all you would see is 5% of the $8 trillion in U.S. dollar holdings that these central banks hold around the globe would be converted to gold. I think that number will be much more. But 5% would be 300 to 400 billion injection into gold. And that's 5 to 6 times what they've already bought in the last 2.5 years, which has been the driving force behind the rise in gold. I don't know. It's rocket fuel waiting to happen. I really, truly do. And this is a trend that has done nothing but accelerate. According to the World Gold Council, historically, every time we see a Fed cut, gold has rallied as much as 10% in the 6 months after the first Fed cut. So we just saw the first Fed cut. We're seeing increased central bank demand. And we're now beginning to see the ETF start to tick up. I mean, in terms of you try to lay out an argument for a bullish case for gold, I don't know their path. And that is one of inflation. And so when you talk about inflation, sanctioning, all of the things that these central banks are thinking of, not to mention the BRICS and their gold-backed settlement currency, which again has been reconfirmed that this indeed is real and will be discussed in the meeting here in the next 3 weeks in Russia. Yeah, I think we could see much higher prices over the next 6 to 12 months, especially as we are now banking another 50 basis point rate cut. At least that's what the smart money thinks will happen. So yeah, in every metric, gold is at all-time highs, but maybe the flawed logic is that it should be a whole hell of a lot higher, that it's been suppressed for so long that these numbers that we are all awestruck over are really well short of the mark, just because it hasn't been able to reach its real price due to the massive shorting on both the LBMA and on COMEX. Maybe, just maybe, all of these other assets that have reached such stratospheric highs, and gold and silver kind of painting a picture, allowing most people, including maybe even you and I, to sell short where gold and silver really ought to be and where it is ultimately going. And I think you can look at some of the traders at Goldman Sachs and at UBS who might echo that same sentiment. I'm sure we'll talk about that in a moment.
Gold's status has also buoyed the sky-high prices as a safe haven investment during times of economic and political uncertainty. The price of gold has soared to new heights this year and is positioned to climb into early 2025, rising to new record highs, according to Goldman Sachs research. With de-dollarization trends and central banks making strategic moves into gold, do you think we're on the cusp of a major price breakout for gold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.